Welcome back to the GMS Weekly Podcast, your trusted voice in ship recycling. I'm Ingrid.
And I'm Henning. Week 46 is here, and it's living up to its name, Desperate Downers.
With just 6 weeks left in 2025, volatility is the story. The Baltic Dry Index posted gains again as freight rates stayed firm, but oil took a hit, slipping to around 59.5 a barrel after Ukraine's drone strike on Russia's biggest refinery at Novorossiysk.
The US dollar, meanwhile, keeps flexing, stronger across nearly all markets, while local steel plate prices in major recycling destinations weakened. That double blow is hurting recyclers' purchasing power and pushing vessel offerings even lower.
There's been a touch more activity, but most of those deals are closing in the low 400s per LDT, and even into the high 300s for smaller or less preferred ships.
In short, the market's limping into the year's final stretch. Let's see how it's playing out around the yards.
Starting with Bangladesh, barren yet somehow bold. Despite a tough year, Chattogram suddenly saw an influx of 7 vessels this week, totaling about 66,000 LDT, including a large 21,000-ton dry bulk unit.
That's the biggest arrival we've seen in months, driven mostly by cash buyer inventories finally moving. But overall, Bangladesh's 2025 has been nearly empty since mid-year. Tariffs at 30%, political unrest ahead of the 2026 elections, and a collapsing taka, now around 122.35 to the dollar, have left recyclers cautious.
Steel plate prices slipped another $1 per ton, adding to the gloom. Even with new arrivals, Chattogram's end-of-year outlook remains dry and uncertain.
Over in India, the view from below continues. Alang's slide down the price rankings has quieted the market, though a few small units that skipped Gadani have found their way to Indian shores.
India still leads on HKC approvals, but demand is soft, and smaller dry units are barely scraping past 400 per LDT. The rupee weakened slightly to around 88.7, while steel plates managed a small rebound of $4 a ton.
Still, it's not enough to spark confidence. With supply thin and fundamentals weak, 2026 looks set to replay 2025, just with a different twist.
Pakistan isn't faring better. After a few months of modest progress, Gadani's momentum has faded again. No new vessels arrived this week, and the long wait for that first HKC-approved yard continues.
The Pakistani rupee dropped to about 282.8, and steel plate prices plunged $13 per ton, falling below 600 for the first time in several quarters.
Add in cheaper Iranian imports cutting into domestic steel, plus inflation and slow approvals, and recyclers are under heavy pressure. Smaller ships are even sitting stranded for weeks at anchorage.
Without stronger tariffs or policy action, Pakistan looks set to finish the year in a disheveled state, just like India.
And finally, Turkey. Aliaga remains steady but quiet, holding firm in the 200s per ton range while the lira keeps sliding, now past 42.3 to the dollar.
The fundamentals are still weak, yet costs keep rising. Staying in business here has become high-stakes recycling indeed.
And that's your wrap on the GMS Weekly Podcast, Week 46, Desperate Downers.
For full analysis, charts, and port data, check out the complete GMS Weekly Report on the GMS mobile app. And subscribe to the podcast on Spotify, Apple Podcasts, Amazon Music, and YouTube Music.
Until next time, stay sharp, stay safe.
And stay anchored with GMS, the world's largest buyer of ships and offshore assets for recycling.